Hello again people. Right, this is a video with a difference. I've not made one like this before, but if you follow me on Twitter you'll notice I do post quite a lot of other people's charts, and I have made a tweet earlier about why I do it, and not to follow their tweets and my retweets blindly. What you need to do, in my opinion, is apply the knowledge we have. So this chart here is the 1 hour chart Euro Swissy. I do, whenever possible, try to avoid the Swissy, and I'll quickly show you why, and then we can disregard that. Is because the Swissy is heavily manipulated by the Swiss bank, their central bank, and this actually bankrupted thousands, if not hundreds of thousands of people, retail traders and brokers, and caused no end of problems. It is, I think it was an announcement that they were going to stop supporting their currency, the Swiss franc that is, and as you can see, that is what happened. That is, that will take out your account and probably put you in negative balance. So you may have $1,000 in your account, be trading quite happily. All of a sudden you've got minus 15 and you owe your broker $15,000. That's how it works. So be very careful. You can get negative equity protected accounts, and most brokers, even without the negative equity protection, will cancel the debt. I know, for example, IC Markets did do this. The only people that they didn't cancel the debt with was a handful of hedge funds. So be aware, be careful. Anyway, back to the subject in hand. Looking at Twitter, we can see this was posted by Crypto Blitz, yeah, and a closer look, and we can see it resembles what we're looking at here. So he's saying it should go back to that level, or that's the best entry level. That is what some call a discounted entry, as it were, but you've got to wait for it to pull back, and I can see why. We've got clear support here, which created the higher high, which hasn't yet been tested as resistance, and if you consider it in the what I consider to be the proper way, supply and demand, this is where the sellers were. As such, this is what, in my opinion, the algorithms will try and grab liquidity by faking in the long traders and trying to get the stops of the short traders, and just basically messing with your head. So back to my chart, and now I'm looking at this. We can zoom in now. He's expecting it to pop back to there. I'm looking at it to potentially continue on down. The reason being, on H4 we have actually just had, if I'm correct, by the looks of it, we have had a bust, break and close. 87, double check, 69, 1787, 1769. That is a momentum trigger. The thing is, though, we have had a H4 reversal to the long side. In other words, we've got a trend going on here. You can just see it. The H4 high is there, penultimate low, that's the high of it, ultimate low, and then it's reversed up. Little candle there has closed above there. So in order to consider this properly a potential short trade, we should then wait for a new reversal to the downside, which would be this candle low here. Let me just double check that red isn't a outside bar reversal. We need to check the high of the red one. It could well be that that's actually reversed already, which would be interesting. The high there is 8316. The high on that candle is 8314. No, it's not. So that's how precise I like to use my levels. This needs to be broken down here and closed below. So the other thing to mention while we're looking at this is he's drawn his lines on the top of the candles. If we draw our line on the close of the candles, which a lot of these guys don't do, then we have a whole new, and I didn't do this before I started making this video, so it just occurred to me. Just shows you he may well have got his entry, his test wrong. Look at H1. So we could do that on the close of the candles there and it would be different, but the H4, obviously the higher the time frame, the more strength that the chart analysis has, trend lines and whatnot. This is showing that the test has already happened, which would agree with the RSI histo, of course. And then if we look on the daily, the RSI histo has now changed. It closed red on Friday, or whenever it was over the Christmas bank holiday, Thursday I think it might have been. So we are in a situation where it should actually continue down. And as you can see here on this chart, we have actually made a 1, 2, 3 reversal. Not our lower high, but we've actually had a trend in place. We've broken that support that created that higher high. We are below there currently. So, you know, just things to think about when you're looking at other people's charts. You know, if they've got the, you know, oh, and the other thing also, on the daily, we have had a daily reversal to the downside. We haven't had a proper pullback really, but we've had a lot of this huge, great big, I think it's called a shooting star. I call them inverse hammers, but I'm probably wrong, but don't quote me on that. Whatever way you look at it, the buyers have had a go, and then the sellers have totally overwhelmed them. And then you've got a massive, that is actually an engulfing bar because it engulfs the body of the previous bar, that red bar. Then a pullback, then a continuation down and a 3 candle reversal. This is the pullback, and because this candle now is showing red and the previous one closed red, that is a bearish signal. If we look at the line chart again, we can now see we have a huge area to the next possible kink in the line chart, if you like, the area where bulls and bears or buyers and sellers had a fight. You can see that on the candles, green candles. So if this goes, it should now absolutely sort of collapse to that level. So just my thoughts on another person's charts. This is how I look at them. That's how we use the 3 candle reversals and the RSI histo on other people's analysis. I hope that has had some value to you. You clearly see we could do all sorts of things on this now. We could do ascending trend line. We've got the descending trend line, so that is exactly what we look for. We are actually still struggling on this level of support here. So we want to see this level broken really, and I would like to see, you know, the line chart. I swear by the line charts because that's where price closed. That's why where you see that great big hammer, you will see nothing. Okay, voila. So yeah, interesting looking chart to me, and I thought I would share my analysis with you. Never ever trade these blindly. Always apply, well, my rules, for want of a better expression. Always apply the 3CRs and the RSI histo if you want to trade these with confidence and profitably. Okay, thanks for watching. Have a good day.